Welcome to this explainer. Today, we're diving straight into the highly anticipated Molbio Diagnostics IPO. But we aren't just doing some generic overview here. We're looking at this specifically through the lens of you, the retail investor. We've got a ton of fascinating data to cover, so let's jump right in.
Right out of the gate, we're looking at a pretty massive 940 crore public offering. But before you put your hard-earned money on the line, we really need to ask if this offering actually aligns with your personal investment strategy. You know, it is so easy to get caught up in the hype of a new listing, but as focused investors, we rely on structure, numbers, and hard facts.
To get there, here's our checklist for today. First, we'll meet Molbio Diagnostics. Then, we'll check their financial health and valuations. After that, we'll unpack the IPO structure, walk through the retail investor guide, and wrap up with broker reviews and verdicts.
All right, Section 1. Let's meet Molbio Diagnostics and look at the actual business behind the IPO.
The absolute heart of what they do is something called the TrueNat platform. Think of a portable, battery-operated PCR molecular diagnostic system. The real beauty of this proprietary tech is that it's explicitly designed for resource-limited settings, yet it can still deliver highly accurate test results in just an hour. It's honestly point-of-care diagnostics at its most agile.
And this technology, it's given Molbio a massive global footprint. We're talking a presence in over 90 countries worldwide. They offer molecular testing for more than 30 different diseases, stuff like COVID-19, HIV, and notably tuberculosis. Actually, their TB diagnostic tech is officially endorsed by the World Health Organization. Plus, to keep up with all this global demand, they operate 6 manufacturing facilities right here in India. So yeah, this isn't some small regional player. It's a massive global medical device operation.
Moving on to Section 2, Financial Health and Valuations. Let's run the numbers.
The top line and bottom line financial growth here is honestly pretty striking. When we look at the leap from FY25 to FY26, we see revenue rocketing from roughly 1,027 crore to over 1,455 crore. That's a massive 42% jump in revenue in just a single year. And their profit after tax followed suit, growing from roughly 138 crore to over 164 crore, which is a solid 18% increase.
But hey, as an objective retail investor, you've got to look at the whole picture, right? You have to contrast that impressive 42% revenue growth against their surging debt. In that exact same time frame, their total borrowing literally more than tripled, jumping from around 123 crore to over 412 crore. Growth is incredibly capital-intensive, and they are absolutely leveraging up to fund it.
Which brings us to a magic number for anyone evaluating this stock, 56.67. That is their post-IPO price-to-earnings ratio at the upper price band. A PE of almost 57 is, for sure, a premium valuation. You're basically paying a premium for that rapid top-line growth and their virtual monopoly in this specific portable diagnostic niche. It's a number that absolutely demands your attention as you figure out your own risk-reward ratio.
Okay, Section 3. Unpacking the IPO structure. Where's all this money actually going?
Here is a totally crucial detail you need to understand. The vast majority of this 940 crore IPO is an offer for sale, or an OFS. Specifically, 740 crore of this issue goes directly to existing shareholders and promoters who are simply cashing out some of their equity. Only a fraction of the total pie, just 200 crore, is actually fresh capital flowing into the company's accounts.
So what happens to that fresh 200 crore rupees? Well, the company's got a clear, two-step plan. Step 1 takes the lion's share. About 125 crore rupees will be aggressively deployed to fund their research and development infrastructure, which includes a brand new center of excellence. Step 2 takes the remaining 80 crore rupees to upgrade their manufacturing capabilities by buying new plant and machinery for their Goa and Visakhapatnam units. It's a very clear play on expanding their future capacity and innovation.
Now, how much of this pie is actually available to you? The structure here is actually super favorable to everyday investors. The allocation quota reserves a massive 50% of the net offer strictly for the retail category. Qualified institutional buyers get roughly 28%, while non-institutional investors get around 21%. With half the issue aimed right at retail, your chances of allotment are mathematically way better compared to issues that only reserve, say, 10 or 35% for retail.
Next up, Section 4, the Retail Investor Guide. Let's talk logistics and limits. If you want in, this is your minimum entry ticket, 14,526 rupees. Because the stock has a lot size of 18 shares and the upper price band is 807 rupees per share, one single lot requires exactly this capital commitment from your bank account.
You're definitely going to want to mark these critical dates on your calendar because the window is tight. Bidding opens on Monday, August 10th and closes on Wednesday, August 12th. The all-important basis of allocation is targeted for finalization the very next day, August 13th. And if you're lucky enough to actually get shares credited to your DMAT account, the grand finale is the market listing on the BSE and NSE slated for August 17th.
Also keep in mind, as a retail individual investor, you've got strict regulatory ceilings. Your absolute maximum limit for bidding is 13 lots, which equates to 234 shares. At the upper price band, this will cost you roughly 1,88,000 rupees. This keeps your application safely under that strict 2 lakh rupee retail threshold. If you bid a single rupee more than this, you're pushed into the small non-institutional investor category, which operates under totally different allotment rules.
Finally, Section 5. Broker Reviews and Verdicts. Let's gauge the market sentiment.
Looking at the documented broker reviews for this IPO, there's definitely a positive lean here. Out of the recorded recommendations, 2 brokerages gave a solid subscribe rating. One issued a may apply rating, and noticeably, there are 0 outright avoid ratings. It seems the market really recognizes the strength of the underlying business.
But to add a bit more nuance to that sentiment, let's see what independent IPO reviewer Dilip Davda has to say. He completely acknowledges that the business essentially holds a virtual monopoly in its highly innovative, tech-driven diagnostic offerings. However, he points out a vital caveat we touched on earlier regarding that PE ratio of nearly 57. He notes that the issue, quote, appears fully priced. Because of this premium valuation, he suggests that well-informed investors might want to view this as a place to park funds for a medium to long-term horizon, rather than hoping for some massive quick listing pop.
And that wraps up our explainer. You've got the complete retail checklist right in front of you now. You know about the game-changing TrueNet platform and their WHO endorsement. You've seen the 42% revenue growth, but you also know about the surging debt and that premium PE ratio. You've got the exact dates, the entry price, and you know this issue is heavily weighted as an offer for sale. So, the final, provocative question you have to answer is this. Given the high price tag on this cutting-edge medical innovation, does Molbio Diagnostics truly earn a place in your personal DMAT account? Let that sink in as you do your final due diligence. Thanks so much for learning with us today.